Because the financial sector forms the core of the global economy, investors should strongly consider making financial stocks an important part of their portfolios. To help with your research into the best financial stocks, we are going to check out 10 financial sector stocks to buy now. Number 10. Arthur J. Gallagher. Arthur J. Gallagher, AJG $166.45, which provides insurance brokerage and consulting services, has seen its stock beat the broader market by about 9 percentage points through 2021's late earnings. The Street forecasts even more outperformance in 2022. Several of the 13 analysts issuing opinions on AJG have made it among their best financial stocks to buy for 2022. 6 rated at strong buy, 3 say buy, 3 have it at hold, and 1 says sell. That works out to a consensus recommendation of buy per S&P Global Market Intelligence. Raymond James analyst C. Gregory Peters rates the stock at outperform, the equivalent of buy, noting that a compelling valuation and a bullish outlook for growth within the insurance brokerage industry through 2023 makes AJG one of the most attractive insurance brokerage stocks. The Street forecasts AJG to generate average annual EPS growth of 15.1% over the next 3 to 5 years. Meanwhile, shares trade at 27.8 times analysis average to 2022 EPS estimate. 9. Citizens Financial Group. Shares in the regional lender and nation's 16th largest bank by assets are leading the S&P 500 by about 5 percentage points from the year to date. Bulls say strength across multiple business lines should lead to further share price outperformance in the new year. We think quarterly results highlighted the potential benefits of CFG's relative diversification, mortgage, wealth, consumer fees, capital market fees, etc., across the consumer and commercial portfolios, amid ongoing strategic initiatives including recent and pending tuck-in acquisitions, including HSBC, East Coast, JMP, Williamette, writes CFRA research analyst Tuna Amobi, who rates Citizens stock at buy. Number 8. Capital One Financial. Capital One Financial, COF $145.10, should serve up another year of outsized gains in 2022 as the economy and consumer spending patterns return to something closer to a pre-pandemic normal, bulls say. Shares in the nation's 11th largest bank by assets led the broader market by more than 20 percentage points with just a few days to go in 2021. And with an average 12-month target price of $186.48, analysts give COF roughly 29% in implied upside from here. Morgan Stanley analyst Betsy Gracick rates Capital One stock at overweight, the equivalent of buy, as an Omicron bounce-back play. The analyst notes COF is trading at valuation lows just as the company's loan growth is about to take off. Over at Argus Research, analyst Stephen Begar, buy, notes Capital One is enjoying encouraging signs as consumers emerge from the pandemic and begin to spend again. In particular, the bank is seeing considerable opportunity in the credit card, consumer lending, and auto lending segments, and plans to increase marketing in these areas, Begar adds. The Street's consensus recommendation on COF stands at buy, with solid conviction. Of the 24 analysts issuing opinions on the stock polled by S&P Global Market Intelligence, 10 say strong buy, 8 say buy, and 6 have it at hold. Number 7. Synchrony Financial. Shares in the private label credit card and consumer finance company are up by a third late into 2021, beating the broader market by a comfortable margin. The Street sees plenty more upside ahead, too, giving SYF a consensus recommendation of buy, and with a fairly high conviction. 9 analysts rate it at strong buy, and 8 say buy, while just 4 rate the stock at hold. Their average target price of $57.80 gives shares implied upside of about 25% in the next 12 months or so. As with many other financial sector names, analysts expect unusually high profit growth going forward. Indeed, the Street forecasts Synchrony Financial to generate average EPS growth of 52% over the next 3 to 5 years. That easily places SYF among not just the best financial stocks to buy for 2022, but for the next few years. Number 6. Intercontinental Exchange. An undervalued stock. An underappreciated acquisition and some new business streams make Intercontinental Exchange, ICE, $135.84, one of the best financial stocks to buy for 2022, analysts say. ICE operates global exchanges and clearinghouses for trading equities, options, futures, and other securities. The company is best known as the owner of the New York Stock Exchange, but ICE's 2020 acquisition of Ellie Mae, a software firm that processes 35% of all U.S. mortgage applications, and some other data and tech efforts have bulls particularly enthused. UBS Global Research Analyst Alex Cram, buy, says ICE trades at a discount to peers despite what we view as a strong mix of both recurring and transactional revenues. Number 5. BlackRock. The street is bullish on BlackRock. BLK, $913.92 for 2022. The world's largest asset manager, $9.6 trillion in assets under management, should continue to benefit from high demand for its iShares exchange-traded funds, ETFs, bulls say. With $180 billion of net inflows in the first 11 months of 2021, the ETF division of BlackRock pulled in 1.5 times the cash haul achieved for all 2020 to extend its industry-leading asset base to $2.4 trillion, says Todd Rosenbluth, buy, head of ETF and mutual fund research at CFRA Research. Most of the street agrees with Rosenbluth's take, giving BLK a consensus recommendation of buy. 7 analysts rate the stock at strong buy. Number 4. S&P Global. S&P Global, SPGI, $473.74, has strong prospects leading into 2022 thanks to increasing investor interest in environmental, social, and governance (ESG) factors, as well as a new acquisition, bulls say. SPGI, which provides financial information, analytics, and ratings products, won regulatory approval in November for its $44 billion deal for competitor IHS Markit, INFO. We remain constructive on SPGI as we believe pending INFO acquisition can drive meaningful upside through accelerated organic growth, more robust free cash flow generation for investments or to return to shareholders, and a greater mix of recurring revenues, writes UBS Global Research Analyst Alex Cram, who rates SPGI shares at buy. S&P Global earns a place among the best financial stocks to buy for 2022 thanks to a loaded bull camp. Of the 13 analysts issuing opinions on SPGI, 7 rated at strong buy and 4 say buy, while just 1 calls it at a hold and another lone analyst says sell. Number 3. Everest Re. Everest Re, $267.02 stock is lagging the broader market by more than 10 percentage points with just a few days left in 2021, but analysts believe it can bounce back in a big way in 2022. Indeed, with an average target price of $320.86, the street gives shares in the reassurance company implied an upside of 20% in the next 12 months or so. Better than expected quarterly results are helping drive the positive vibes on RE. Improved claim trends helped drive the improved combined ratio to 89.3% from 97.5%, writes CFRA research analyst Catherine Seifert, buy. We lift our earned premium growth forecast to 16% to 20% in 2021 and 17 to 22% in 2022, as RE leverages increased demand and firmer rates for coverage, while shifting its policy mix to one that's less volatile. Number 2. Signature Bank. Signature Bank, SBNY, $319.73, is one of 2 S&P 500 financial sector stocks to earn a consensus recommendation of strong buy. Given that shares have already more than doubled in 2021, up 136% through December 23rd, it's noteworthy that the street expects SBNBY to deliver even more outsized returns ahead. 10 analysts rate shares at strong buy, 6 says buy, and 1 rates them at hold. The Pros' average price target of $373.61 gives SBNY implied upside of 17% in 2022. Perhaps more remarkably, analysts forecast the regional lender to generate average annual EPS growth of 18.5% over the next 3 to 5 years. And number 1, Assurant. Multi-line insurance company Assurant receives the highest consensus recommendation of any financial stock in the S&P 500. Among its tailwinds, analysts say AIZ is benefiting from consumers buying insurance on all the goods they've been snapping up in lieu of spending on services during the pandemic. When it comes to policies for everything from used cars to new 5G smartphones, Assurant is forecast to see increasing demand. Assurant continues to rebound from the pandemic, with premiums and fees, PFO, up 7% in the quarter versus 2% in 2020, says William Blair analyst Jeff Schmidt, who rates AIZ at outperform. Global Automotive is benefiting from strong used car growth. Also, AIZ began a nationwide rollout of in-store device repair services for T-Mobile and extended its relationship with AT&T to manage its device trade-in program. Assurant is number 1 amongst the best financial stocks to buy for 2022, though, admittedly, that opinion comes from a small crowd. Of the 7 analysts covering AIZ, 4 rated at strong buy and 3 say buy. Their average target price of $194.67 gives the stock implied upside of about 28% in the next 12 months or so. Do let us know in the comments which one of them you would like to buy. Please subscribe to the Stock Advisor. Thanks for watching.